Morning. What's up, fellas?
What's up? What's up? Hey, we might have to edit that beginning, man. My hair is like 2 centimeters long in the beginning of that joint. We might have to go put some clips back in that joint, man.
I thought you was about to say something profound when you talk about your hair.
Dang, do me like that.
Hey, you know who you need to talk to.
Hmm.
I think he got enough going on. So welcome to another team meeting where our mission is to distract you from your current story, dismantle your current belief systems, and most importantly, inspire you to change your mind so that you can then change your life. These are all of the places where you can find us: Instagram, Facebook, YouTube, um, up here, Game7.com, our clothing line. But our mission is to serve. So whenever y'all see us, if y'all can hit that share button, that would be dope. So we can get in front of more people and serve more people. So the topic for the week is not accepting your gift. I did not make a presentation for the week because I didn't feel that we needed it. And the thing that I really wanted to talk about was too hot for TV. So we're gonna keep it in the back pocket for future reference. But what we are going to do is go back to looking at some stocks for the week. Because personally, and people can say what they want, but a lot of people that I know that were interested at first, they already quit when it comes to trading and investing. They can say what they want to say, especially when we know that it doesn't require any money. You can simply trade the paper. And eventually, once your paper results are good enough, you'll take your 5, 10, 20, 500, 5,000, 10,000, 700, whatever amount of money that you have to invest, and you'll start investing it because you're literally missing free money. But I know throughout that time, G and I, we've been going at it throughout the entire process, and we've been having a lot more. I'm not going to say luck, but a lot more
Success.
success. There we go. A lot more success over the past couple of months. It was kind of frustrating at the flip of the year because we did all that learning over the last year or so, and the market was in a position that it's literally never been in before. So there was an adjustment period. But we feel like things have been a lot more successful over the past couple of months. So we're going to do I guess you can call it a watch list for the week. And gee, if you could take notes, and I'll do my best to take notes too, so that before we log off, I can make a slide so we can have something to refer to next week. All right. So we have a watch list that I made, I don't know, probably a month or so ago now. It's options based, and all of them have moderate to extremely high value. So there's a lot of not necessarily a lot of volatility there, but a lot of people trading it, so you can get in and out of your trades easily. And they have contracts that are not too expensive. So what up, Jess? So if you're just getting in the game, you can get in lightly, or or if you're already trading frequently, you can get multiple contracts because when you get multiple contracts, that allows you to get the best possible for you entry price, and it also allows you to scale out so you can get your bread back, and also allow some contracts to run so you can make even more money. All right. So first up, we're going.
Mo,
Yo.
I'm happy Justice jumped on. Before we go into that, let's just spend a couple minutes talking about that journey because I feel like we started this call specifically about stocks a little bit over a year ago, and obviously it has evolved. But in that time, and we talk about it all the time, we've been through a lot, just kind of mentally, strategically, etc. So maybe let's spend 5, 10 minutes talking about that, just so people can understand how much we've gone through to get to this point where maybe the portfolio isn't as big as we thought it would be. But speaking for myself, I feel a lot more comfortable and prepared and ready to have that success moving forward.
Okay. Good question. I wish I would have prepared some slides for this. Um, but just going through that process on the spot for me, and then also being wise, paying attention to what other people went through. So number one is you got to have your life together. not like the end all be all, like you've made it in life, but you gotta be mentally well. Like you gotta have strong relationships because when you trade, there's so certain emotions that come about that I really ain't felt since like I was on the field, bro. In terms of like winning, and losses sticking with you, like you don't want to talk to nobody, or you want to talk to everybody, or whatever the case may be. So make sure that you're mentally fit. Um, Number two is financially fit. I noticed that a lot of people who are trading have money to trade. Either they risked it all, like but they do say like the average American can't afford an unexpected $400 bill or $1,000 bill or something like that. I guess I'll say 750, the average of the two. So a lot of people, you know the number, Just?
Yeah, it said the average American doesn't have $500 in their savings account.
Okay, the average American doesn't have $500. So the average American literally cannot invest, right? So you have to be above average um, to have the income to be able to trade or to invest. And there's a lot of different ways that you can have that income. And I noticed that a lot of people just didn't have any money. So I'm curious, like, how are you surviving? And one of the simple ways is like if you're not credit strapped, like if your credit is not absolutely trash, you can just run your credit up. Like be very intentional about building your credit over the years, right? So you get to a point you got 100 G's worth of credit, 20, 30, 40, 50, and no bill. And then it gets to a while, you can let your bill start to run and start to pay a lower amount on your credit bill and use that extra money to invest, right? Now that's risky, but if you don't take a risk, you'll stay in poverty. But you can and even like say you get your credit up to, let's say 50 G's. That's very, very realistic. 30% of that is 15 G's. So you can run that bill up to 15 G's and still be under your 30% limit to have outstanding credit, right? So say you run it up to 10 and you take that 10 G's and invest it right there. That's the way that you can get that money. Or you have a great job where you've already been saving everything that you had. You have to have some money to invest. And then lastly, I would say this goes back to being mentally and financially fit. You got to be able to stay in the game. I think all of us, we jumped in hard. We still jumped in smart because it didn't smoke us out, but we jumped in fast, not understanding. It's just like watching film. Anybody can watch football film, but when you get on the field, it's different. You feel me? Like I know I got the edge rusher. When that edge rusher is 40 pounds bigger than you, runs a 4.2, and is just a monster, it's a whole different ball game. And then also being in a market that you were not prepared for, you got to be able to last. So once again, being financially fit and disciplined. So having your life together, being emotionally fit, being financially fit, and being disciplined. Those are all steps that I believe that we were actually, pretty good in it, and it's why we were able to last throughout this turmoil. But I've also seen it wash most people out. Like now our conversations about stocks, it ain't nowhere near as big as it used to be. I kind of joke like, yo, y'all quit. Because like people don't even talk about it anymore. And then also being a part of these trading communities, you can see the people come in and out. So you got to be fit enough financially and emotionally to be able to last so that you can even stay in the game. Because I often hear some of our mentors say that it's not timing the market, it is time in the market that will make you wealthy. So that is my impromptu feedback, G.
And just to add to that, when I think about it, it's kind of like, at the beginning of the year, everybody go to the gym and the gym is packed. And then a month later, 2 months later, it's the same people that was there before the new year. That's kind of what it felt like. And not specifically to our circle, but just at a grand scale. Like you get to the point where everybody's talking about Robinhood last year because the market was just, historically crazy. So everybody was winning. And I think people got accustomed. I know I got accustomed to taking W's on stuff I didn't even research sometimes because W's were just being handed out. And then it slowed down, especially at the beginning of the year. It got a lot harder to get those W's, and it started to be a lot more L's. So you stop seeing people talk about it. And it's kind of similar with Bitcoin. I think I might have texted you, Malk. I was walking through CVS, and it was somebody who clearly didn't really know Bitcoin, but even he was like, damn, Bitcoin dropped $3,000. It's like, all right. So you get this kind of like this hoopla around stuff. And then when people realize, all right, it's not just put your money in and watch it triple, but you actually got to put work behind it, it gets a little bit harder. So it's really a war of attrition, to the sense that you got to go through the ups and downs. You have to invest time. Going back to the workout analogy, you got to work out in this. You got to study. You got to try and fail. You got to paper trade. And eventually, you should start to see more consistent gains. But it's not easy. And I think that was the sense I got throughout last year, just from the general populace, that this was easy. And this is a reason why it was only reserved for the people who had a lot of money before, because it's not an easy game, but it's definitely something that you can learn if you invest the time and put in the work.
Yeah. One thing I've noticed was that, like, I would have conversations with people regarding stocks, and I'm like, oh, I go, how did you graph that? What was the support and resistance? And people would just look at me like I was crazy. And once I realized, once I started talking about actually graphing and going a little deeper in researching stocks, I realized a lot of people just jumped in the game because, like G said, they felt like they can get easy wins, right? So it's people just jumping on the bandwagon, and well, my homie told me to look up XYZ. I got this because he said it, versus and I realized a lot of people were doing that versus like actually taking the time, just like G said, to research and do a lot of the work ahead of time. So as time goes on, when the market goes from everybody taking dubs to taking L's, the people that don't do the research or don't really know anything besides the public knowledge, I definitely saw those people and go out the way. And then I also have people be like, dang, bro, like I didn't know it was that much into the stocks. I'm like, yes, there's no way there. The stock market is going to allow you to just come in blind and then just keep chucking up all this money and win it. There's no way that you can successfully do that over time without understanding how it works. That's just not an option that's going to happen all the time. That we just got lucky in the beginning of last year, because that was a lot of people's only option to make money when when the pandemic was in full effect. But I think now that the market has been crazy, a lot of people haven't been really doing the research. It's going back to like the normalcy of what people think behind regarding trading. So that's something I definitely noticed.
Yeah, all great points, guys. I think trading is exciting for people because it gives you an opportunity to see returns, right? I think especially when we talk about investing money in other landscapes, real estate, people who are investing in properties, they're hoping to get a 30% return. If you're in the bank, if you put your money in the bank, you get less than 1%, less than 0.5% return. But when people got a little bit more time on their hands during quarantine and things of that sort, they seen people getting 50%, 70%, 600% return on their money, right? And of course, those kinds of numbers are going to grab people's attention. But I think many times, like the team has stated, people fail to understand that there's a skill set that's required to continue or to even have those kinds of realities, right? For us, and specifically for me, I think the great parts have been that all of us have worked consistently throughout our lives to meet and exceed expectations. So that reality of going into trading and getting daily feedback on how well you did that day, it's very similar to being an athlete. very similar to being someone who is trying to change their reality and have intentionally tried to change your reality, since you were a preteen, right? Because you've been jumping into new environments, right? Four of us didn't go to our neighborhood high school, all four of us, right? All of us decided to jump into a more challenging high school experience. I mean, we instantly got feedback at that point. Did your neighborhood middle school, elementary school prepare you for this level? Sometimes the answer was yes. Sometimes the answer was no. You got to see what your resources are, and utilize your resources. And that's the same thing for trading, right? I think like most people, though, we had to also learn the lessons for ourselves in some regards when it came to not jumping on bandwagons of certain stocks that were just performing, very, very abnormally, because what goes up must come down. You can definitely win on both sides, but it's important when you have a skill set that you can identify when something is no longer going to be going up for a period of time. And I think that it's hard on a person. I think trading is very, very hard on a person. This is speaking to the point on why many people who start trading don't continue to trade. It's extremely hard on a person who doesn't have a normal process of analyzing what they do, right? So if you go throughout life and you just act expecting results, and when you don't get the results, you take a step back, you analyze what you did and how'd you get to the place that you got that result. If that's not a normal process for you, you're going to get deterred, right? Because everything about trading and everything about changing your reality is analytical, right? When I decided to go to this college, yes, I did. Yes, I did study this degree and get this degree, but damn, I figured out that my college is not respected in the industry. Ooh, if only I would have researched that information before I pull these loans out, or did a little bit more research and seeing what schools, this industry, these companies were looking to pull from. Or, hey, yes, I did, enter or accept this job offer. We talked a couple weeks ago about getting that first job offer after undergrad. Dang, they offer $40,000. You got to understand what that means in the landscape, right? Is that a good deal or not? And just constantly going through that process and things that you do daily, right? With your food, with your exercise, with how you are in your relationship, how you prepare or how you perform at work. If you're constantly going through a process of analyzing your performance, then trading is definitely for you, right? Because there are very quick hits of dopamine that say, hey, look, you did great. But then there's also that immediate feedback of, no, you didn't do what you were supposed to do. And if you're not used to feeling that direct feedback on a consistent basis, it can break you down. And that's more so with a mental, that's where like the mental health issues kind of come in for people. And I don't mean like mental health issues like you're going to be nutty or, have unstable emotions. Now, don't get me wrong. You hear people cussing, fussing, and breaking keyboards, right? That's in a lot of trading books. But that's just because there's passion behind it, and people spend so much time, researching and doing the work before the trade even comes up. So yeah, all of us have gone through our process. Last thing that I'll share is trading is an amazing thing, very much like real estate, because there's so many ways to be successful. But the only way really to identify the way that works for you is by doing it, right? There's 40, 50, 60 ways that we've just identified in our first year of trading on ways to make money trading, right? There's long positions, there's scalping, there's swing trading, there's position trades, there's long-term options, there's call credit spreads. There's just a number of different approaches, and when you stay in the game, you identify what it is that you need to stay interested in trading, and also what kind of returns that you need to keep your attention. And it's great because we live in a time and space where you can develop these skills by trading on the demo accounts, trading on paper, But it also has really helped us to have a support system of people that are doing this with us so that they can help to level our heads during times that we're not really the most confident or maybe a little too confident.
Nah, that's all true, and those are things, especially at the end. That's something you only understand if you're doing it. Like you can read the book, you can watch all the YouTubes. You don't. You got to do it. Go ahead.
Sounds like parenting, right? That's why I like a lot of the responses for people are like, I mean, I know you read the books, I know you done babysat a couple of times, but it's different when you got them 24 hours a day, 7 days a week, and you're the one that's directly responsible for this little person.
That's a fact, 100%.
Yeah. Yeah. But I mean, I feel like this is a whole tangent. But you can get closer to the feeling of parenting without having kids than you can get to the feeling of trading without trading.
Demo, maybe?
Yeah, I mean, paper money is like babysitting, right? Like you're doing it, but
Yeah,
at
that
the end of the day, yeah, like
They don't really count.
yeah.
But what I also, and this is a Malk outside looking in perspective, but just how so many people quit. Like I'm always paying attention to what people do. Now, obviously, I don't know what people are doing when they're not communicating, but the people I'm referring to and that I see, they usually communicate when they're doing something good and they're doing well. When they're not communicating, that means that they going through what they're going through. But a lot of the people that quit, to me, it speaks to like what level of life that you committed to getting to. You feel me? Like even if the bread is gone, you had it, you lost it, you don't have it yet, you never had it. This is like if the last year hasn't shown you that this is a must-know skill at the absolute minimum, you lacking. And if you're not doing everything in your power to either grow your business, like you're an entrepreneur, to where you're salary finessing at work, to where you're growing your salary, or an entrepreneur as a business, where you're getting your bread up outside of 9 to 5, because obviously money is a tool, but it's an extremely powerful tool that can take you to the places that you want to go. So watching the people quit, I can just tell, like, and they're not doing everything in their power for something else. Like they're giving in to this pocket of life. Like this where they're gonna be. You feel me? Because when you got something going on, I know we're seeing your videos, I'm seeing your texts, I'm seeing your posts or whatever, right? You're working on something. But when you're not, it's like you're just gone. So I just hope that the people who did quit, that they find a fire in some regard to get back in the game. And it don't got to be this, but I'm sure that when money starts coming in from whatever fashion, and you need somewhere to put it, you're probably going to put it here and not the bank. So it needs to be something that you know.
I think on top of that, so I agree with you on that part, but I think it's also a fear. And that fear is probably rooted in the fact that they haven't dedicated as much time as they needed to understand the market and the strategies and the way to go about reducing your risk. But this is a very, very, very risky game. And if you take a couple of L's and don't even understand why, then you're going to be a little averse to continuing to do it. So if you are at that point where you tried it, you didn't have as much success as you wanted, and now you're thinking about turning back, maybe take a step away from the market, but don't take a step away from investing the time and learning it. Because eventually, once you have the right tool set, you'll be a lot more successful.
So we'll wrap. And like I always talk about, your thought process and your belief system. So when I say quitting to G and everybody else, I'm not just talking about quitting trading. Like trading is just hitting the buttons. Like it's everything else that really matters, you know? And everybody got the time. I don't care what your situation is. If it's important enough to you, you'll figure it out, right? But when you don't think you can do it, you're not going to make the choice to put the time in, right? So you're just out the game. If you don't believe you can do it, you're not going to anticipate getting the results. So why am I keep going if I'm losing? So you're just out the game. But you don't think you have the knowledge, or you don't believe you can have the knowledge. You just get out the game and you stick to what you know. But it is important to highlight that, and y'all all said it But we've put a whole lot of time into this, like literally I don't want to say 7, but literally 6 days a week. Because Saturday is kind of like a woosah, you feel me? The end of Friday is kind of dead in the overall market. Sunday, you prep for Monday, and Monday through Friday, you go at it. So it does take a lot of, and especially like the biggest thing for me is like as I'm looking at this on the other monitor, it's like seeing the patterns. Like before, it was just like lines and like bars, you know. And now you can, speaking for myself, I can see the language. It went from like Braille, not knowing it, to Braille and being able to understand it. So I'm gonna pull up the charts and somebody else can say whatever you gotta say if there's something else to say. All right, so first we got SPY, which is the S&P 500, which has been going crazy over time. And this blue line is the all-time high. Let me take this volume off. And zoom in. You can see it once it's bad. It's just the 4 hour. Let me go to the daily. You can see it's putting a lot of pressure on this 424 level. So SPY, and what I learned too, like people were scared because SPY was getting so high, like the market was going to crash. What I learned, it's not crashing until it's crashing. Like it's bullish the entire time until it's not. You feel me? Because it's staying in this range for a minute. It's been ever since it broke the 400s. It's been up there. So
like
to
the housing
me,
market.
exactly. Right. And that's another thing. Like too, the wealth gap has increased exponentially. So while it seems bad for so many, it's actually overall good because those at the top, they're killing it. They're absolutely killing it. But I agree. So it might be bad for a lot of people, but overall, it's doing good. So first one is AMD. So I haven't charted any of these. These are old lines. All right, so it's kind of holding this level, the 73 level. Over here, it did a double bottom and bounced up. So if it can break through this level, it'll probably go back up to 99. So what I would do, AMD above 83, I would set an alert for it. Y'all jump in whenever.
Hold on, I'm trying to take the note. But yeah, I agree. That is that the 200 EMA?
Hold on. Come on, man.
We took the note, so you could do it later.
All right. Yeah, it bounced off the 200 right here.
So, excuse me. So that tells me, since it's above the 200 EMA, I'm definitely looking for calls. It looks like it's an even smaller channel above that 200 EMA. So
Yeah,
maybe not a channel, but there's some support around 80. It looks like.
Right here?
Yeah, right about there. So I would be looking to see on Monday which direction we're going in. And then like it's a mini resistance. So you got that 82, 89 resistance, but a little bit lower. Yep, right about there.
Yeah.
Like 82, it looks like.
And what I noticed too, and like watching for swings, but the hourly levels seem like to be the key levels for day trading.
For day trading?
Mm-hmm. Like I've been calling them bounces to you when I've been touching you. It's been off of them hourly levels.
Okay.
Now,
So
let's see.
for me, I would want to see which direction it goes on Monday, because it could definitely go down and touch that support. And if that happened, then I would be looking for a bounce, because you could do one of two things. Assuming it bounced, and even if it just runs to that first level resistance, that's a nice little scalp opportunity. But longer term, if you catch that bounce and you do go through 82, 89, then that's a nice little profit. Hopefully, like you said, going back to 90. Assuming it just goes straight up, I would want to see what it does after it breaks that 82 level. But you still got some room to get in up to 82, 89. Obviously, if it dips below the 200 EMA, I would get out, because it would have to find support, which could be at that 79.50 level.
Yeah, and what I learned too, like just from my own, how they say the snipe, I would wait for 79.50 first. Like it would have to hold this 80.32 level like it held here. Like it would have to hold there for a long time. Or knowing that if you get in there, be prepared for it to go down here and you have to scale in. You feel me? See, like on the 4 hour, we didn't see this second level. On the hourly, we do see this second level.
Right.
Right? So I'm saying calls. I mean, if you get through 82 with volume, maybe at 82, but definitely at 83 to be safe, or a bounce between 80 and 79.50.
Yeah, agreed. I think if anything, if you did get in at 82, like you said, it would have to be with a lot of volume, and it would have to be small. So you enter with a couple contracts and then scale in if it breaks that top resistance.
All right. Then I got a watch list for breakouts. So maybe that could be the list that we post. NIL, I was mad because I had this level, but I just didn't see it that day. Right? So see, this is the level right here, this purple line. I already got my note, 43.30 key level. So it held it. This is the hourly. It held this level pretty strong. Boom, it dropped under. Came back and touched it. So it's kind of like a W. So it's all right. Once it get to this 43.40, this joint gone. And this was the 11th. So this was Friday morning. Friday morning, right above the pre-market high that confirmed the level that I already had in IO. And now it's bull flagging for real. You know?
Mm-hmm.
But I've
So
been
your
trying.
purple, my bad,
Go
my
ahead.
bad. I was saying your purple is the 9 and the red is the 21.
The purple is 9 and 921, 50, 200.
Okay.
So that level, they blew through that now. It's got a pretty strong trend though right here.
And I'm very big on the EMA crosses. So you got a upwards trend. You basically, as long as it's not channeling, look all the way at the bottom to the left of the beginning of your white line. It looks
Right
like
here.
that's where the 9 crossed the 21.
Right here, yeah.
And now look at it. As long as that 9 doesn't cross back below the 21, it's going to continue to go up.
Mm-hmm. And the
So,
9, he talking about this purple line right here.
which is the exponential moving average over the last 9 days, as opposed to the red line being an exponential moving average over the last 20 days. So one of the strategies I like to use is, as long as it's not a channel, when that 9 crosses upwards over the 21, that's a good entry. and you stay in it until the 9 crosses back over the 21 downwards. And if you look at this one, it literally never crosses back over. It still hasn't crossed back over. So if you entered down here where it first crossed and you just stayed in, you would still be in. And all of this would be profit.
And then also, notice how it crossed. It touched this level 2 times. It's 34.88, and then the big green candles when it broke out and it crossed at the same time. So you had a lot of confirmation there.
The only struggle I would have had with this play is that ideally you enter, like if you're going to get in a call, you want to enter above the 200 EMA. And if you want to get in a put, you want to enter below the 200 EMA. So that would have made me pause a little bit. I probably would have waited until it crossed the 200. But still, even there, you would have made a lot of money.
So for this, what I see, it's a bull flag right here on the hourly, and it's coming up to the 9. So you can either play a bounce off the 9 or a bounce off the 21. I'll be careful though, because of this last pullback, it tested the trend. So I ain't really messing with that one.
Yeah, I think it like with how much it's ran, I would be nervous because I feel like at some point it has to have a pullback. It may not, but I don't think I would enter at this point.
Yeah, only for like a day trade, because like if it hit this 9 and this trend at the same time coming off this bear flag, and this volume is very, very high too. So Monday, Tuesday, it might run real hard, But I would play this trend line, this 45.50 level. I would play that real intentionally. Yeah, that's kind of we kind of missed that one already. All right, DraftKings. Lord, I got a lot going on here. See, this was another one I missed. I had it charted. So I had the triangle. Boom, look what happened as soon as it broke out the triangle. Money, bags. Missed them. All right? Had the trend lines already. I had the trend. Boom, I had the upward trend based on these already. I had the triangle resistance. Boom, it went all the way up. I don't know how I got this line, but it went right there. Tested it, and then rolled the top trend. So I had it set up. I just wasn't paying attention to it. And these purple lines be like entries if you want to scale up. Played out perfectly. You just repeat. Like this purple line came from this hourly level. This purple line came from this hourly level. This blue line. This blue came from this hourly level back here. It's like a science, bro. Everything lined up perfectly.
So then let's try to predict what's going to be next.
Yeah, I know. We just got to find it. So this John, for a day trade, if this trend line, see if it holds, this would be the third touch of the trend. And if it breaks this key level, it could probably run up to here to 57 before it pulled back.
I think the good thing is, in addition to the trend line, that trend support, you also have the 200. So that should, if it does drop, that should hopefully be a floor for it.
Yeah.
And then maybe you get some momentum upwards.
And there's more confirmation on that blue line. But if it breaks this trend right here, if it goes through 58, she's going to go to at least 61 or so.
So that's the alert plus 58.
Yeah, I'll put that. Now to notice too, like it's like a different picture at each level of zoom, I should say. Cause you see, like once it hit that all-time high, she just lost the juice. This is a mean little bounce right here. But the volume is not that high either. So 58 with volume. 58 with volume. That's DraftKings. MVIS you gotta be careful with because it's one it can be one of them mean stocks. But look at this. I had the triangle down here. Broke out the triangle. Gone. Gone. You would have had to pull through right here to make it here, but she looked good. Hell yeah, this is a strong level right here. It's 23.39. Let's see. Yeah, that's a good one. I'm gonna beat that. Probably say 23.50 then, I guess. This 23.46. So I have 23.50. And it's holding whatever this bottom level is pretty strong. Come on, baby. And for support,
Yeah, about 2060.
yeah, 2060.
So I really feel like it's going to make a strong move. I don't know in which direction, but you see how those candles are really tight, like the last four.
Mm-hmm.
I feel like it's almost like a little consolidation, and then it breaks out. One thing I would say about MVIS, it is very volatile based on news. So if they
Yeah,
come out with any news this week, then that'll send it up.
and Wall Street bets can also get a hold of it. And if you look at this trend right here, it's a triangle a little bit. A triangle flag, if that's a thing. Oh, this they call it a megaphone. Ain't that what they call it? G?
I don't know if I ever saw that.
Yeah, one of y'all Google it real quick. Megaphone. Yeah, I like this level right here. I guess above 24.50 with volume.
I mean, I wouldn't even be mad if, because you're touching the trend line support right now. See if it's going to bounce.
Yeah,
You
yeah. Mm-hmm.
know what I mean? Like that could be the bottom, and now you're running up to that resistance that you have, and with volume, you push through that.
Well, I would wait. But if you do
Definitely wait
that,
for the turn.
I have to be ready to scale. I would wait
Yeah.
for this level right here where it's touched 2 times right here. The
Mm-hmm.
yellow. That would
Mm-hmm.
be my focus. So 2050. If you're gonna go now Monday morning, it's gotta take off. You feel me?
Yeah. Yeah.
So either 2050 bounce or above 24 with value. 2050 or 24. I just put on this. All right. There's another one I missed too, I think. Let's see. Yeah, so I think I had this level right here, this 53 level. And I missed it. It's another one of the megaphone joints. This at an all-time high though, so I
Yeah,
don't
if you
know.
go back to I think it was the 4 hour, it looked like it was ready to go down. Maybe it was the 1.
I
So
don't know.
same
Because
thing.
look,
I mean,
it's bouncing off the 50.
right. But let's see. I would definitely wait it out. Like I wouldn't enter this right here because you got that 9, like I talked about earlier, it's flirting with the 21. And a couple of times it kind of touched it, but it didn't go through it. So now you got to see where it shakes out. And to your point, you said that's the 50, the blue line?
50, yeah.
Yeah, so you got the 50 acting as a support, but you definitely would need a bounce here.
Yeah. And then I like this level right here for the bounce. 54.50.
Yeah, that makes sense.
54.50 bounce, or if it closes, this is the hourly. If it closes any hour below the 50, I would be careful or play the downside.
I think the mix of it being at an all-time high or 52-week high, close to it, and the fact that it's kind of losing steam, at least temporarily, is definitely one to watch, but you're probably looking for a bounce before you even think about getting there.
Yeah, and this looks like a bear flag too. So that 50 is a key level. So I ain't messing with that one. All right, Tilray. It's a key level right here. Let me get this off. Come on, bro. I can see from back here. You look right here. That joint match up perfectly.
And what level is that? What price point?
1 second. All right, this is 22.50 basically, or 22. I gotta zoom in. The 22.50 to 60. 22.60.
Okay.
22.60.
So I really like this because I like when you're got like 2 different things going on at that level. If that was the daily, your 21, your 9 EMA was crossing your 21 and your 200 upwards. So to
On the
me,
daily.
that's very bullish. So that's a great time to get in. So even if you look at this interval,
Go back.
so you had. What you doing, man?
Trying to go back to the beginning. Here we go.
All right, boom.
So really $23.
There's that resistance.
Mm-hmm.
The hourly. So here when my 9 EMA that the middle band too? Or that's the
Yeah.
50. That's the 50. When my 9 EMA crosses over, and if you're gonna play the 50, you might as well wait for that too. If you get this 9 to cross the 21, the middle band, since it's right there, and the 50, to me that's the entry point. Like when that cross happens, I'm getting there.
But this is a pretty strong support right here too.
Resistance.
Nah, I'm gonna move it down
Oh, okay.
right here.
So even better. Even better, because if it drops, I mean, even if it drops, I'm still waiting for that cross because it's also close. That's just like triple confirmation that it's going up.
Yeah, I mean, well, that's where scaling in is like so important. Because like obviously part of your process is looking at the lines. I don't really look for the crosses. I look for them more so for the bounces. But however, all right, boom, I got the line process so I can be a little patient. Or I see that it's untouched this for the third time. So I ain't sure yet. I'm gonna put in a starter. You feel me? And then I'm gonna let the thing do what it do. And I can average in. And if you look here too, this is once again like this is how we're talking about it. This is the importance of putting the time in. You feel me? It's like, I say it every time, but you know how when you with your girl, you gotta kind of figure out what she's saying. And the longer you with her, you can speak her language, because she ain't just gonna tell you. You gotta put the pieces to the puzzle together. But this is a pretty it ain't perfect, but it's another form of resistance that gives you a triangle. So I would say bounce off of 1940 and wait for cross. And what's that called? A golden cross, right?
When it crosses the 50 and the 200, I think. I'm gonna look it up.
All right. So this is only one a 1950 bounce and the EMA cross. Come on, bro. It's like whenever I share my screen, my computer starts acting dumb.
So the golden cross is when the 50 crosses the 200.
Okay.
So that happened a little bit back.
All right, boom. I like this one. Oh, 1950 bounce or plus 23. And also too, like once you learn about the market movers, market makers, and I can remember the dude, what's his name? Sam would always say second entry. What they do is they know everybody's going to enter at 23. They'll let it go through 23. They'll smack it back down. Then the second time when it go through, they call the dude Andrew, I think it's Coop. He called it a stop loss something. But basically they make it hit your stop and then they let it run.
Stop loss rate.
Stop loss rate? I don't know. It's called stop loss. Stop loss.
Okay.
Right.
But no, I think I've seen it. I know what you're talking about. And yeah, because it's all of those numbers are so psychological, it's easy to predict it, especially if you got a lot of money. So like you said, you let it run to that, drop it, everybody gonna panic, you take that money, and then you keep going. So it's almost like you got a little insurance on top of the money you already was gonna make.
And that's probably what happened right here for real. Boom, it hit it, instantly came back. You feel me? So that's even more confirmation of that 23 level. I like that one.
Yeah, me too.
I ain't checked the volume. And the volume is 25 million people a day. And look at the volume on the day when it did hit 23. Look at this joint right here. Stupid green. They smoked everybody. That was current. Once you realize what they do, I mean, well, it's not like it's not common knowledge once you figure it out. But yeah, that 23 level is ready to go.
I
And
think
it's
the thing is, my
go
bad.
ahead.
It's like you gotta play within the rules, right? Like you can't beat the people with the money, but if you
Mhm.
understand what they do, then you can kind of play that game. And sometimes you're gonna end up on the wrong side, but as long as you know they do stuff like this, that helps you out.
Yeah, 100%. And that comes down to like you and Just was saying, putting the time in and being more knowledgeable. You know, because intelligence is being able to speak about one thing in various different ways. You feel me? Like most of our community, we only know about money by putting the money to the ear, the money phone. You feel me? We don't know this way. But also, too, I see, look at this doji. This is the definition of a doji. You can barely see it on the last day. So, I'm real bullish on this one. All
Saying
right.
I'm watching this Monday morning.
But the only thing is that it's a meme stock too, so gotta be careful. Not really a meme stock, but Wall Street bets can get their hands on it. This is another one, Workhorse. What's on? All right. Very similar. I can see it already. It broke the downtrend. It's just like Tilray. Whatever this level is, and look at it. Look at the recent volume.
Hmm.
And as
And
go ahead.
to your earlier point, it looks like in a couple of days you get that golden cross, right?
Hmm.
Because your 50 is turning up, going towards your 200. But that's probably a couple days away.
Yeah, it's ready. But that volume the other day, crazy, right at that key level. Come on, baby. I like doing these rays too. I feel like I can see it more clear. Like it takes me directly to the reference point. So here, what's that, 20? So above 20 is ready to go. There's another key level right here. And I do my color code and my solid lines and my my dotted lines, they all mean something. And that comes from just having time in the market. That's when your girl mad and your friends over and you be like, she be all right. Or you know when it's serious enough that you gotta step away or put everybody else out. You feel me?
So I think it's at a very key point. It looks a little bit better on this chart, but you're very close to the 200. Actually, right here is not as bad, but on that daily chart I think you were on, it was very close to the
Yeah.
200.
Mhm.
So you kind of got to see which direction it's going in because it could go down from here. You want to see confirmation above the 200, in my opinion, before you enter a call, especially because it's right there at the 200.
Yeah. I mean, true. That depend. I think that depends on how long you want it though, because we got a doji right here, right? Um, it took off the 9 last time. The 9 was the key resistance on this drop.
Mm-hmm.
Boom, it broke and it took off. So it's
Cross.
right next
Yep.
to the 9. It's right on this support. We got a mean doji. It won at 18 bad with volume here. It won at 18 again. A lot of people sold off when they hit that 18 level again. The 200 is flirting with it, as you said, and it's a doji. So I would see with these hitting on the 4 hour. This is a triangle right here for real. Let's go to the 1. So it's definitely going to be a triangle. Yeah, look at that, John. Hey, this joint about to go one way or the other.
Yeah, I will wait on this one.
Hmm?
I said I will wait on this one. It's
Yeah. So
you know how
what
sometimes
level you waiting for?
I just want to see what it's going to do. Like even if you use this triangle, I want to see if it's going to go through that triangle or not. Because I was going to say certain stocks across every interval, you kind of see a similar story. This one,
Mhm.
I feel like it's telling different stories depending on which interval you're looking at. Because the 4 hour it looks good, but the daily to me is not that bullish.
Well, for a short time frame, I'm seeing daily. I'm seeing bounce right off the 9, and I'm seeing the doji. I'm not talking long term. You feel me? I'm
Yeah.
talking strictly for a day, 2, maybe 3 kind of swing, right? So I'm seeing bounce on the daily with the doji. I'm also seeing room to fall though. I do agree. Like I'm
Yeah.
seeing room to fall to like 11. You feel me? So I
Hmm.
do. Let me move this up. But no, let me draw another one. I do agree on that part. And that is how people get smoked too. Because that little 2 hour move, depending on how much bread you put in,
That's a
can
big
be
move.
a big dollar move for your account, one way or the other. So 1150. 1150 is another level. Yeah, so I would just, you got to be careful.
Hmm.
And you can't have FOMO because you got room to go down, but then also the 4 hour and 1 hour, you get in this triangle. Once
Hmm.
it breaks this joint, she out. You feel me?
Right.
She going to at least 18. And she's hit 18 twice. So on the third time, well, that's not even 18, that's like 18.25. So on the third time, that's probably the time to go from 20. So for real, there's an opportunity for you to catch it from 15 to 20.
This is also a stock that recently has been in the 30s to 40s. So it can run with the right news, with the right information. This one is very volatile because it was tied to that USPS contract, and I think they didn't get it, and that's why it dropped. But I think a lot of that drop was an overreaction. So now it's trying to find like a new baseline, whereas before it was up in the 30s and 40s. I think people don't think it's a $30 stock, but it's also not an $11 stock. So it's kind of trying to find where it should be situated.
And look at his volume. This is crazy. The last time it hit 18. So that
Hmm.
18 is this the level for this joint.
Hmm.
Plus 18. All right, we'll do like 2 more. Is there any ones y'all was looking at? Y'all just want me to keep going through the list?
You can just keep going through the list.
Macy's. Check out Macy's M on
But
the daily.
I traded them last week. Come on, baby. I just have to come back to that job. All right, Macy's. All right, so Macy's. So this is the daily. So it's got a strong trend, uptrend. All right, so that's your support right there. Come on. All right. I got some lines already.
You can do the top line of the if you go back to the daily, the top the 52-week high, and do the top of the triangle to where it is now.
So there's 2230 level. That's his blue line, the solid blue.
Yeah, but show people the actual like triangle though.
Oh, got you. Wow.
Yeah.
Yeah, so it broke out. Good catch. I didn't really pay attention to that. All right, so it broke out the triangle. And it hit this 20. It hit this, come on, bro. 2050. Yeah, it's about 2050. We'll see when we zoom in. Hit about 2050. Bounce back off the triangle. Good catch. Yeah, definitely. So
Start moving.
Go ahead.
No, I just it met resistance, then started moving sideways and started building up like with consolidation. So I'm hoping that this upcoming week we'll get some more volume and we can push past that 20. What do you have? 2067. So basically 21. I'm in pretty light. It's like a cheap swing. I think I got in at 40 cents, so $40 basically for 100 contracts. And I'm looking hopefully for it to break up towards 21.
Okay. So even on the hourly, you got this other triangle right here.
And all they need to do is just manipulate the stock a bit, like drop some piece of news, some kind of collaboration, some kind of I don't know if they have earnings coming up or not, but this is a pretty small move that's needed in order to make money on that.
Yeah. And there's got to be another short squeeze.
You think so?
Yeah, Macy's getting smoked right now. Macy's got smoked with the malls going away.
Yeah. But
Think about it. They was an anchor store for all the malls.
No, 100%. But now I'm wondering if now that things are opening up, if retail in general is moving upwards.
Yeah, I'm not sure.
I like this one though, especially because, like you said, Jess, it should be fairly cheap. I would say, would you probably get at the money calls?
Probably this week. I got in out of the money last week or a week and a half ago, just lightly because I seen it building up. And yeah, just to give context too, this is like I'm in a period right now where I'm getting more of a macro view of the market, right? I'm not trading every day because sometimes when you're on the field consistently, it's harder for you to see the plays or the easy ways that you can win. So I've learned with people that are very successful trading, I mean, they take hiatuses for days or sometimes weeks to ensure that they have really clear vision on what's going on in the overall market, so they don't get so tunnel vision and have losses that they would otherwise not have. And it's definitely worked.
So I would say,
they also have a horizontal line. You don't gotta keep doing that.
Yeah, bro, I got horizontal lines on the screen. But I don't like them. I like the raise now because I can see like where I'm getting the level from.
Okay.
You feel me? So like right here, 1950, is probably where you want to enter. You see, there's been a strong support over here, strong resistance right here.
Yeah. So basically, for anybody that's looking to get in this play, you will wake up in the morning pre-market before 9:30 and see if it's broke that resistance level pre-market. Now, it would have been a stronger indication if Friday it had closed above 1950, but some can argue, hey, 4 cents away is basically, holding that level, and you're just looking for volume to break through that pre-market, and then when, on market open, for them to at least hold that level and see if it can continue to trend up throughout the day.
All right, so how many was that? How many did we do?
Like 5, 4 or 5.
5 or 6. We looked at SPY, AMD, DraftKings, Tilray, Workhorse, Macy's.
10. We did SPY, AMD,
Oh, I
NIO,
forgot about MBIS and DraftKings.
MBIS, Cisco, Tilray, Workhorse, and Macy's. All right. You got them all down, KG?
Say that one more time.
Did you get them all down?
Yeah, let me say them one more to make sure.
SPY, AMD, NIO, DraftKings, MVIS, Cisco, Tilray, Workhorse, and Macy's. Now I'll make a post for it, and we can see how we did next week. That free game. And also for whoever does watch, we got a nice text the other day from somebody who views it, and she said that this is him right here, right on the spot. I'm assuming this is him. What's up, Andrew? We got a text. I didn't even see that he was there. What's up, bro? About to talk about you. That a couple of months ago, one of our viewers had shared our podcast, particularly the stock ones, with her brother. She was like, he's around your age. If y'all can do it, he can do it too. So she said he started checking out the videos that motivated him to learn more. He started to learn. He kept watching. And a couple of weeks ago, he made a move that gave him 10 G's. All right, so that's pretty powerful. Shout out, Andrew. Keep doing your thing. I will make the post for the 10 from this week. We'll check in next week to see how we did. Go get this bread. And remember, if you don't have it, still trade the paper. And once you prove it to yourself, you start seeing them results, you're going to find a way to trade your real money and get that real money. Don't quit, because if you quit, you quit. You feel me? You are eliminating all of your opportunities for growth. So don't quit. Check out the watch list. Trade that paper or trade that real paper. See you next week. Peace out.